Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of June 2nd, 2025. Let's get started. SEAF signals for this week. We have technology, industrials, and consumer discretionary. Consumer discretionary replacing communication services that had a little bit of a rough trading week. Technology remains perfectly strong with ones across the board. Industrials coming in with another pretty strong score with 2s and 3s for the trading week, and then tactical and strategic respectively. And consumer discretionary really getting pulled along with its strong tactical month. Energy resumes its negative trend. Financials also continues down there as well. We see a little bit of life out of healthcare, but I'll show you why that's just kind of a wait and see in just a minute. Heading into our heat map. Like I said, technology looking really strong, 3s across the board, though a little bit lighter on the flows for the given week. 0.13 is the top spot, meaning there wasn't a ton of movement. We had an overall 1.4% net increase in assets under management for the 11 sector spiders as a whole. Much of that came on Monday after there was a delay in tariffs. 1.7% came in on Monday. Obviously, there was a little bit of more machinations to bring it down to 1.4 by the end of the week. It's kind of interesting to see with these tariffs. It's kind of a supply and demand problem. With the tariffs on and off, future projections of cash flows are very much tied to how much those tariffs are going to be on and for how long. So we kind of get a little bit of a fun instance to see how fundamental equations work with the turning on and off of the tariffs. That's no here nor there, just something I found interesting. Industrials coming in at second, 0.06. Like I said, overall weak flows. And while healthcare was third on the trading week, 0.04, effectively zero. So we are seeing a little bit of a lighter flows on the trading week, though trending in the right direction with greens more or less on the top and reds more or less on the bottom. Bringing up my total sector spider, total AUM. So if you add up all the 11 sector spiders, you track it on a chart, this is what we have. On the bottom here, we have a SPY price chart. And as you can see, again, I mentioned this a little bit last week, but respective of the 21-day moving average that we have here in red, when the assets under management for the 11 sector spiders is above its 21-day moving average, we tend to see positive price appreciation. And when it's below its moving average, we tend to see negative price appreciation. As of right now, we're still floating above that 21-day moving average. Obviously seeing a positive uptrend in relative outperformance, but this, we're starting to kind of play with the 21-day moving average. We came and touched it toward the end of May. Now we're into June. We're still kind of flirting with it. So this is gonna be something to see on the kind of the broader market. We see a drop below the 21-day moving average. Theoretically, we'll see the SEAF move to a more defensive nature as the market is ready, potentially ready for a correction. We are not there yet. But just I'm going to keep this chart up as we start to kind of negotiate this line, just to kind of keep an eye on where we are at for the overall money flowing into the sector spiders. But like I said, we see this drop below the 21-day moving average, start to see a trend shift, see that price price decline in SPY. Ideally, we would see SEAF start to move into defensive sectors. Moving on to our rainbow chart, healthcare. You mentioned healthcare, third on the trading week, like I said, 0.04. We didn't see a lot of movement there. It was ranked third, but not a lot of flows really kind of flowing into healthcare. A bit of a sideways move, trying to negotiate neutral as we have been. We did a little bit about 2 weeks ago. Nothing really to do in healthcare. We would need to string across a couple of these weeks with a little bit stronger flows. And like I said in the past, I'd like to see above that 0.4. That's really a significant move on the trading week, according to our algorithm. Moving into financials. I'd like to show you guys the top and the bottom here. Some of our investors like to know where to get out of, where to take profits, or where to avoid. Financials is a place to avoid right now. We had a really nice strong run up in the relative outperformance versus SPY going back an entire year, but really have been flat since mid-April. Flat to down since mid-April. We're in avoid status for financials. Definitely a place to continue to avoid. Really need to start to see in neutral before we start looking at financials again, or it gets on our radar. But right now, place to avoid and starting to really trend downwards in the relative outperformance versus SPY. Energy, same thing. Energy is a place to avoid. We've been seeing these little bit of heart attacks coming up here where we attempt to come up, touch favor, to come back down over and over again. Right now, we're even struggling to get up into neutral. Test neutral, reverse back down to deep avoid. Test neutral, reverse back down to deep avoid. You can see there's these little pockets of little spurts of positive relative performance, but we're really still in that overall downtrend that we've been in for really more than a year and a half. I've seen little things on financial news, but when's a good time to buy energy? Right now is still not that time. Got strong outflows, 0.15% on the trading week, some solid accumulation through 3 different time periods. Really still a place to avoid for energy. Technology's been strong. We had that sideways pocket that we were trading for quite a while. It really broke down through toward the end of or early part of April, and we've rebounded. We've had a nice relative outperformance trend that we're starting to break through. We're kind of touching on this upward resistance. We not only have this in the relative performance versus SPY chart, but we're also negotiating upward resistance in the price chart as well. But like I said, highly favored, as high as we can go. Total of 3 overall, and in our Gulf scoring system, the low score is best. So technology continues its positive uptrend and continues to be a place to be. Industrials is in a similar boat. Really starting to try to uptrack through. Nice scores across the board, 2, 3, 3. Starting to see some accumulation in the strategic and the quarterly, the tactical and the strategic, the monthly and the quarterly. Nice relative outperformance trend that we've had going back to since February. Really kind of starting to take off. We have a nice outperformance trend. Industrials continues to be a good space for SEAF. Consumer discretionary. Consumer discretionary not scoring quite as high as the other 2. Seeing a little bit of a modest relative outperformance price trend going back to late March, early April, climbing into favored. I would like to see a little bit of stronger flows to kind of really traject this thing into upper favored and really pick up those relative outperformance trends, but seeing a nice positive outperformance trend since we've hit low favored. I know it's been kind of trading in and out with communication services, so I would like to see some stronger trades. Ideally, continued tariff relief will give consumers a little bit of a better feeling about their outlook and maybe not hold on to their cash as much and go out and spend. But that hasn't happened yet. And again, we don't project anything. I guess just wishful thinking. So overall, seeing some positive things out of consumer discretionary, seeing that nice little positive trend of outperformance. But as a third sector, again, looking to see, kind of watch this space for next week. If we really get some positive flows, this thing could take off on us. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.